another episode of Banking Matters. I'm your host, Ashton Woodling. Joining me today is Brandon Maggard. Brandon Maggard is a financial institution specialist with Ken Bank Insurance in Louisville, Kentucky. He's been in the insurance business for 14 years and has over 11 years of experience in specifically helping financial institutions with their insurance needs. Brandon is also a member of the National State Banking Association Insurance Roundtable and graduated from Western Kentucky University with a BBA in marketing. Brandon, welcome to the show.
Thanks for having me, Ashton.
Yeah, I'm so excited to visit with you today. So, one tradition we have in Banking Matters is to discuss each of our unique journeys into the world of banking and financial services, because no one as a child dreams of becoming a banker or honestly probably an insurance person when they're 6 years old. So tell me, how did you find yourself in your current position?
Well, I actually may be the exception. It's a family thing for me. My grandfather actually, his career was insurance and banking, as long as I can remember. And my father, who's the CEO of our agency, has been doing this for 30 plus years as well. So I didn't know I was going to do this, but it worked out pretty good on how I got in this business.
Yeah, kind of in your blood then.
Yeah.
Yeah. So tell me, I'm not super familiar with, honestly, with the insurance offered by state bank associations. What is that? What do you offer?
So we're a full service independent agency that only works with banks. So we're a niche agency in that we focus on those products that banks have, and that is depending on the bank, can be 13 to 15 product lines. Most commonly where we see the growth is financial institution bond, directors and officers liability. Cyber is obviously a huge topic and something that I deal with every day. We also do the bank's property, casualty, general lines, and collateral protection, fee income. In certain states that we operate in, we do employee benefits as well. So, I mean, any kind of insurance that would touch a financial institution is what we specialize in.
So does every state bank association have an insurance agency, or is this unique?
No, it's pretty unique. We have, I'd say there's probably, off the top of my head, maybe 15 specific agencies that are, at least a part of state banking associations. And we've actually, our footprint is obviously Kentucky. I'm out of Louisville, Kentucky. But our agency is partnered with other state banking associations to be their preferred providers. So we have those partnerships with West Virginia and Indiana at the moment.
Wow, that's amazing. I didn't realize there were so few. Definitely a niche industry.
Right. Yep. And as banking has kind of gotten more complex, I think is an understatement, with regulatory pressures and rates and everything going on. We've still been able to grow. So with our expertise, because it's all we do. We write over 150 banks in 6 different states now. So it's pretty good for our footprint here, and it's been good.
What size banks do you work with?
The biggest bank we work with, north of 30 billion in assets probably now. The smallest bank is at little S&L on the river up here. That's about 20 million in assets. So I mean, that covers the gambit of community banks, if you will. It's we have a unique way we go about it, and we also have access to all the resources that we have here at the Kentucky Bankers Association, which is huge. Our general counsel and IT, everything. So it's a good setup.
Yeah, that's awesome. So does every bank have like a standard insurance package they need, and then you build on from there? Or is I'm going to call it a package, but is it everything totally tailored to each bank? Every group looks different.
For us, every bank can look pretty different. I mean, and as like I've told you, as you go to different states, I mean, it can really change, right? I mean, what works in Kentucky and what applies to in Kentucky maybe is not the same in other states. So you have to be nimble in that, um, and and learn and grow and know what banks need. But I mean, most every bank can look pretty similar on the surface, but when you dig in, I mean, certain coverages and certain language in a policy may need to be added or taken out depending on type of loans that banks are doing, what products they're offering, or there's a lot of banks that are set up quite differently.
So, what does that look like for you on your side? How do you get to know the banks and figure out what their offerings are?
I'm on the road a lot. Like I said, covering 3 states, headquartered here in Louisville. Um, I've always enjoyed being on the road and talking to banks. So I'm just in and out of banks all the time. So I kind of know what's going on in the industry. I mean, I go on lobbying trips to DC with the associations. So I'm with bankers and understanding the issues that they're dealing with in DC, not only DC, but also in Frankfort here in Kentucky, or in Charleston in West Virginia, or in Indianapolis in Indiana. So, that keeps me plugged in, what's going on with banks. But also, just developing relationships. And when I say relationships, genuine relationships, with my customers and my banks, whether that's, um, some of my bankers that like to play golf. I'm a golfer, so that helps us, connect a little bit closer as well. But also, like I said, we're on the road a lot. We go to a lot of conventions. We go to DC a lot. So we're in front of bankers all the time because that's what we do. That's all we do. We know banks, and that's what we do.
Yeah, so you've got kind of a unique perspective, right? So you get to know
Right.
banks and banking, but you also have that insurance side, dual focus.
Right. It's served us well. Like I said, most general lines agents that do everything. Um, I don't know how they could keep up with everything that changes day to day in a banking setting. I really do, and be confident in that. And that's one of the things we've committed to. I always tell everybody I'm a inch wide and a mile deep, right? When it comes to this stuff, I mean, because you got to know what you're talking about, because that could be the difference in a claim being paid. And there's a lot at stake, especially for these community banks that have reputations on the line in a lot of these cases.
Yeah, so tell me about some of the different things that banks are insured for. Like when I'm thinking of it, just in my head, I'm picturing like as basic as a customer, I don't know, slipping in the lobby and hurting themselves and maybe is elaborate as like a cybersecurity attack. Is that
Mhm.
pretty
Yeah.
accurate?
Yeah, I mean that's exactly right. A bank has general liability policies that cover them for those situations, or workers' comp policies, just like any other business. Obviously, property and auto insurance and things like that. To breach response policies that would kick in the event of a cyber breach, or a cyber extortion event, or you know um, banks, or lawsuits that they may face, whatever that may pertain to. We also insure the money in the bank, right? I mean, the bond is there to insure the money. So, um, a lot of banks don't understand that their bond actually has a lot of cyber coverage in it as well. It insures the money and how it's stolen via wire fraud. We're seeing a lot of check fraud. So, I mean, it truly is. I'll try to. I don't want to get in the weeds too much. I know we don't have too much time, but it truly is complex, and they all need to really tie in together in our experience, so everything is working in unison.
Yeah. Tell me about the phrase bonding of staff. What does that mean? What does that mean? Like, what does that look like?
So bonding of staff, I mean, that would be if an employee is bondable. So the financial institution insures the financial institution bond insures the bank for fraud. And in order for an employee, one of those insuring agreements is employee dishonesty. If an employee were to try to steal from the bank for any reasons, most common, you know, embezzlement, or something along those natures. But your employees are bonded. Um, I mean, the only thing I'm aware of that would make it unbondable. Again, this is also state by state,
Sure.
pretty specific on that too. You got to check your state laws, but um, if you know of any fraudulent or unlawful or dishonest behavior because of a background check you've done, maybe on an income employee, that they've say they were convicted for theft or something, and you still hire them, your financial institution bond in most cases is not going to extend to that employee if they were to steal from you. If you know of a situation and you don't report it to the insurance company, that they do steal from you, and then they do it again, there's probably not going to be coverage for that either. So that, I mean, in short, that's I think that's what you're referring to when you say bond.
Yeah. So would you say it's accurate to say that banks aren't necessarily required to do background checks on their employees, but if they don't, or if the results are somewhat negative, that would have an effect on their insurance coverage? Is that accurate?
Yeah, I mean, the policy, like I said, is there for bonding, for the bond and to insure for theft. So there's not really anything in there that requires that background check. I think it's a good practice to do so. Yeah, exactly.
Yeah. How would that, what do you look at for like directors and officers?
So yeah, what most people call their D&O policy obviously insures the directors and officers, right? For if they're sued for a myriad of reasons. There's also many other insuring agreements that are included in that policy, and how that policy is structured and designed is very important. But again, it depends on the bank, depends on what risks you have, but it's everything from your D's and O's. Like if the bank fails, you can be sued for that, by regulators, by shareholders, whoever, customers. There's professional liability for things that you do for just as a bank, that every bank does. There's lender liability if you're sued for any kind of loan related lawsuit. Fiduciary liability for your ERISA type plans, your 401ks, things of that nature, and employment practices obviously is included in that as well. Where if you're sued for any employment related situations, which is harassment, things like that. So, and that's there could be a few others. Trust liability if you have a trust department. Again, that depends on the bank. Not every bank has a trust department. So. But yeah, I mean, directors and officer liability is very much something that we deal with every day, and we look at and can help banks for sure.
Yeah, this is so interesting. It's like this hidden world I never really considered of banking. When I think of insurance, I think about like the premiums I pay on my homeowners or my auto insurance. What kind of factors go into the premiums for a bank's insurance?
A lot of factors go in. It depends on asset size. Obviously, they look at the loan portfolio, concentrations of said loan portfolio. And I'm referring to like the D&O and the bond in this. Obviously, certain employment practices that we just talked about, like background checks, that's a question they ask. There's all kinds of different things that they're going to ask to rate it. When you're talking about cyber, where most of my questions come from on what's required and what you need, it used to be, it's basically to get the good policy terms that you need and the good pricing, you need to have certain controls in place, point blank. And that applies to the bond too, with some of those cyber coverages, just wire fraud and things like that. So we really dig in the policy and tell the bank. A lot of banks don't know what they have to do to even have coverage. A lot of these policies have requirements in them, depending on who the carrier is, and they require a few things of the bank in order for there to be coverage. So it's not just quoting and writing the insurance. We read the policy and we educate the wire room, the ops room, on what they need to do, or help the IT person, on who they need to contact and how that process looks in the event of a breach, in the event of a cyber event. So again, to answer your question, I know it's not. There's not really one short answer. It's a complex, and depends on your bank, and where you are. That a lot of these answers come from.
Yeah. So my background is in internal audit. So when you mention controls, you're kind of speaking my language here. So When you talk about the controls that a bank has to have in place, do you actually go in and verify or have them otherwise tell you those are there? Or do you just write within the policy that contingent on these controls, you have this coverage?
So typically, what we do is we send an application, and the application will ask the necessary questions. And most of the carriers we operate with will, it's kind of there's a couple knockouts, right, to get the full limits that you need. So, there's questions, and the bankers that would listen to this, I'm sure they've dealt with this. Multi-factor authentication is basically a requirement now for cyber insurance, and um, if you don't have it and you have cyber insurance, it's probably not what you need. Segregation of networks, those type of things. There's a few knockout questions that are in there that we don't just send the application. We also go through the application um, and advise the bank on how they need to answer the question. If we're having issues, because I don't, it used to be the CFO would answer these questions on the cyber application specifically. Now every bank I'm dealing with has their own IT person or own IT department, and they do the application, and there could be there's overlap between departments now on a lot of these policies. So we help the bank with those questions, and they can be worded kind of tricky, and it just can be kind of complex when you're doing it.
Yeah, so you don't have like one contact within the bank either. You're in contact with
Yeah,
multiple departments and multiple people.
yeah. I mean, depends on the size of the bank. I mean, I still have some banks where the president CEO does everything, and that's how it's always going to be, and that's fine. I have some that the bank gets the CFO that handles these apps, and the IT person does this one, or on some of our lending products, the collateral protection products we do, obviously that's going to fall under the chief lending officer, and that he's going to be the one that's going to be able to know that information for the portfolio and everything else that we need. So yeah, it's a variance of who we talk to in the bank, for sure.
Yeah, so we talked a little bit about your background and you've been in this arena for quite a while. How has it changed and evolved since you first started with bank insurance? Have you noticed any new trends or surprising issues?
It's evolved. I mean, in the last 3.5 years, it's changed like crazy, with just the cyber portion, period. But I've been doing this 11 years with banks specifically, like you said. I've been in insurance for about 15 years. I got my license when I was in college. Insurance is all I've known, but banking specifically in 11 years. I mean, one of the biggest challenges that we face, just me selfishly, is more M&A activity, mergers and acquisitions. Right, we're losing banks. When I started, there was over 200 banks in Kentucky. Now there's less, about 120. So there's a lot of that going on, which changes the size of the banks, which changes the communities they're in as well. But mostly it's been the cyber. And again, that affects a few different policies within a bank's insurance portfolio. So, that's where I've been spending most of my time, and getting myself familiar with those forms, and the service of those, and what's required, and educating banks on that. So, I mean, like I said, it's changed quite a bit, and I see us moving forward. I mean, most of our banks have the cyber controls in place. So you're not seeing the big pricing jumps that we saw a few years ago. But it's only going to continue to get tough. I mean, there's just a lot of factors in banking. Like I was saying earlier, what goes on in DC really matters. These elections matter. What goes on in your state in particular, that stuff affects. It trickles on down to all of us in this industry. Obviously the cyber risks that are going on, interest rate risks that we're dealing with, post COVID. Obviously banks, with hiring, right? People working
Yeah.
from home, we're all having to adapt and find a new way forward, in this. So it's a lot.
Yeah. So you've mentioned cyber several times. Tell me about that. What does that
Mhm.
look like, that process? What is that?
So every bank should have a cyber policy that insures them for lawsuits like liability, third party lawsuits. There's also first party coverages in there for things like ransomware. Everybody knows, has heard of that. Also, notification costs, right? So if you have a breach, depending on your state, every state also has different privacy laws, and those requirements are different on how you're supposed to notify your customers if you do have a breach. There's everything in coverage from there for forensics to find out what happened, who's been affected, to PR if you need public relations as well. So the cyber policy is going to be there to. I always say, your cyber policy. It really, your biggest risk with cyber is your reputation. If you have a cyber incident and it's not handled properly. And that probably rings true to every community bank I deal with for sure. And we deal with it all the time. Every month there's a breach we're dealing with. So how that breach is handled when you're in the boardroom and you're having to address it, and you have somebody to call, and you have a procedure, it can mean the difference in the reputation for your bank and the community. And that's really important to us as somebody who I know it's important to the bank, but it's definitely important to us as somebody who only works with community banks. That's very important to us as well.
Yeah, that's interesting. So do you see a lot of cybersecurity type claims?
Yeah, we see them all the time, and they're all different. They look different. There's some of them that are the same. See a lot of business email compromise where banks are. Outlook's probably the most common place we see these instances start, but we deal with them all the time and help banks with that. And I don't think that's going away.
Yeah. I don't think. Yeah.
I always say it doesn't feel like it's if, it's when type thing. No matter how things. If banks have obviously invested a lot of resources into making sure they stay secure, and that's great. And obviously, we encourage that, but anything can happen, right? So that's we deal with it a lot.
Yeah. So if you could give one piece of advice to our listeners, whether that's related to cybersecurity or anything else we've talked about today, anything in the insurance arena, what would you say?
On the insurance side, I would just, especially on your professional lines of insurance, your insurance lines that are specific to you as a financial institution, your bond, your D&O, your cyber, make sure you know what that stuff says. And if you don't know, make sure your agent, you should have an agent that does, because that is a big deal for a myriad of reasons that we just discussed. Just in life in general, I would just say, we deal with it all the time in banking. What we just talked about, just embrace the up and downs and stay the course, and don't give up. That's kind of one of the things as things kind of change all around us worldwide in our own country. One of the things I find that's helped is just keep my head down, keep working, keep doing what I'm supposed to be doing, and controlling what I can control. So that's the way we look at it.
Well, that is perfect. I love that. Stay the course. Like, that's perfect. And read the policy and understand what your coverage is. I think that's good advice for life. And we see that in banking all the time, right? Read the contract. And I even tell my 9-year-old, like, we don't sign anything until we read it, try and imprint that on her early. So I totally agree with that. That is great advice. Yeah. Well, thanks for joining me today, Brandon. I've learned a lot. And it's been really helpful. And for the rest of you.
Thanks, Ashley. Thanks for having me.
Yeah, thanks. And for the rest of you, that's Banking Matters.